We're back now with some breaking economic data.
The U.S. economy added 311,000 jobs in February. That's a lot more than expected, though the unemployment rate rose slightly to 3.6%. We've got NBC News business and data reporter Brian Cheung and Investopedia's editor-in-chief Caleb Silver with us to break it all down. Brian, let's start with you. Break down the numbers for us. How do they compare to last month?
Yeah, well, the jobs numbers that we just got a few minutes ago showing that Americans are still adding jobs, and a lot of them, 311,000. That's how many jobs were added in the month of February. That is a little bit slower than the over 500,000 pace that we had seen in January, which, by the way, was a really, really unprecedented number. But look, this is well above what some Wall Street economists had expected, which is somewhere around 225,000. The overall unemployment rate came in at 3.6%. That is a bit of a notch up from 3.4% we had seen in the month of January, but still nonetheless shows near 50-year lows in terms of unemployment. So a lot of people have jobs and opportunities out there.
So, Caleb, let's bring you in here. It looks like the jobs market is still running hot, as we just heard from Brian. So what's your reaction to these numbers, and what did they say about the economy?
There's still about 10.8 million jobs out there, believe it or not, with all this aggressive hiring. Guys, 343,000 jobs a month added on average for the past 6 months. A lot of those jobs going to leisure and hospitality, a lot of those jobs going to retail and government jobs and professional services. So one part of the economy, the labor part of the economy, especially in the services sector, still red hot, and wages keep going up. So the Fed is trying to cool the labor market down. It doesn't seem to be working right now.
Yeah, Brian, let's add to that. Help us break it down. Which sectors are showing the most job growth? Which ones are showing the most job losses?
Yeah, well, 311,000, this doesn't tell you which industries saw gains and which ones even saw some contraction. So as Caleb was just mentioning, leisure and hospitality added a lot of jobs, 105,000 in the month. We also saw retail trade, people that work at the mall, for example, adding a lot of jobs as well. That added about 50,000. And then manufacturing is still chugging along as well. It added about 37,000 jobs. But we have to remember, not all industries saw gains. We actually saw in the information, which could perhaps be tech jobs, transportation and warehousing, those specific sectors actually saw a contraction in the number of jobs in the month of February.
And to put this in greater context, Caleb, I mean, earlier this week, the Fed chair, Jerome Powell, told Congress that inflation might be harder to tame and that the Fed may need to actually raise rates even more than expected. So does this jobs report support that view?
Absolutely. And the Fed's going to meet in about 12 days and 5 hours, and they're going to raise rates. The question is it going to be 0.25% like it has been for the past couple meetings, or 0.5%? And that's why you've seen investors get so shaky lately. They think the Fed's going to remain aggressive. And Fed Chair Powell said it this week. He's willing to drive that unemployment number way higher if he has to and put people out of work if it means bringing inflation down. It's the lesser of two evils, so expect the Fed to remain aggressive.
And Brian, the other thing that's important to so many is wages. What are we seeing on the wage side of things?
Yeah, well, wages are still going up. And when we take a look at the numbers from this report, the wage growth, if you look at a year-over-year basis, was 4.4% in January. It actually sped up just a little bit to 4.6% in the month of February. Again, that's a yearly pace. That's lower than the over 5% pace that we had seen last year. But look, if your wages are going up by 4.6%, okay, that's probably good. But it's not good when you consider that the overall price increases that we've seen because of inflation are up over 6%. So it's not keeping up with that, but still good to see that this number isn't lower, although, of course, the Federal Reserve trying to balance these types of things as they try to see, all right, are wage pressures also going to lead to other price pressures as well, a threat that we'll continue to have to watch.
All right. We know you both help us watch it. Brian, Caleb, thank you both. Appreciate it.
Thank you.
Thanks for watching our YouTube channel. Follow today's top stories and breaking news by downloading the NBC News app.